Hello guys and welcome to second lecture in section 5. I'm confident that you are enjoying what you're studying in this course. We are getting into the core of Elliott wave analysis starting from this lecture. So I request you to pay attention and watch these lectures few times to get familiar with the concepts. This lecture aims at discussing three major rules you need to know as an Elliott wave analyst to avoid errors while labeling waves. All in all, there are just three straightforward rules that you need to remember in a 5-wave sequence in both sides of the market. Rule number 1. Wave 2 can never exceed the start of wave 1. That is, wave 2 cannot retrace more than 100% of wave 1. And if you see a wave 2 exceeding the start of wave 1, you should know that it is an invalid pattern and it is time to make changes to your wave count. Let's understand rule 1 through a basic pattern and also through few forex examples. The first example is of euro-dollar on a 4-hour chart where we will validate wave count on this pair based on the first rule of the wave principle. I'll quickly label the 5-wave sequence in an uptrend on this pair first. Now let's highlight the price area that we are interested to study. I'll place a line where the 100% retracement will be for wave 1. Guys, as you can see, price only retraced up to 61.8 internal retracement before the uptrend continued in the form of wave 3. Therefore, making this a valid wave count. The second example is of pound and Swiss franc where price has declined in a 5-wave sequence on daily charts. Once again, I will label the 5-wave sequence in this downtrend. Now to study Rule 1, we will shift to 4-hour charts to get a clearer picture. And you can see that price only retraced up to 78.6% internal retracement, making this a valid wave count. Let's continue studying the rules within the wave principle. Rule number 2. Wave 3 can never be the shortest impulse wave, which means wave 3 travels farther than wave 1 or wave 5, or in many cases, both. So as long as wave 3 does undergo a greater percentage of movement in terms of price than either wave 1 or wave 5, this rule is satisfied. Let's look at wave 3 through a basic pattern and few examples of this rule. Using the same example, we will see if this wave count stays true to the second rule. I will highlight the 3 impulse waves within this 5-wave sequence. To check whether wave 3 was the largest of the 3 or at least 2 impulse waves, we will measure the number of pips within each wave as I show you here. Wave 3 travelled for 820 pips, which is more than both wave 1 and wave 5, hence validating this wave count. Similarly, I will perform the same steps on pound and Swiss franc. Clearly, wave 3 is the longest and strongest among three impulse waves in this pair 2, hence validating this wave count. Rule number 3. Wave 4 can never overlap wave 1, that is, cross into the same price area. As a wave analyst, you will always look to ignore small overlap on 4-hour charts or below in forex due to extreme leverages, but this rule stays true to daily charts and above as price action is more real. A key point to remember here is that while using candlestick charts, the tails of the candles do not make a part of this overlapping, as we are only concerned about the main body of the candles. Finally, let's study the third rule using the basic pattern and some examples to understand this rule. In our first example, I will highlight the price region of both wave 1 and wave 4 to see if they overlap or no. As it is obvious that there is no overlapping, hence euro dollar wave count is correct. Similarly, there is no overlapping on pound and Swiss franc, hence making this a valid wave count. Guys, please go through some more examples using other forex pairs to understand these rules on your own. You can also test these rules on examples in previous lectures and see if those wave counts are valid or not. Once applied correctly, you will be able to use these rules to your advantage while trading, as you will see in next lectures. This also brings an end to section 5, and I will see you in section 6, where we discuss each wave's personality within a complete Elliott wave cycle and trading opportunities each wave presents. Before I leave, I request you to provide your honest ratings and reviews for this course, as they mean so much to the success of this course. Thank you.